If you have a plan and you know the statistical probabilities that I'm going to take these trades and these are the results I expect, it's not gambling. It's there. But if you're just going in blindly, which unfortunately, it's sad to say, but many people do, then you're gambling and you're just going to lose your money.
If you're watching this on YouTube, make sure you smash that like button and click subscribe. For those of you listening on a podcast platform, be sure to subscribe on whatever platform that is and leave us a rating if you can. The more likes, ratings, and subscriptions that we get, the more we can spread the message and grow our community. So we also have a free Facebook group. It's called The Average Joe Finances Network. Check us out, join the group, join the community, ask questions, and become a part of the team. All of our other social media accounts are listed in our flow page, and we have them in the video or podcast description below. Hey, how's it going, everybody? So today our guest is Rick Mazur, and he's a financial trader, investor, podcast host, and mentor. He also helps people become better and more knowledgeable in the trading space. Rick is an entrepreneur owning his first business as a teenager and then starting a tech company focusing on internet solutions back in the mid-90s. Basically before the internet was a thing. So Rick is also a real estate investor, a husband, and a father to 2 children. He started investing almost 25 years ago, first with stocks. He then experimented with options and Forex, all part-time as more of a hobby. When he founded the proper trading mentors combined with the replicable processes that work day in and day out with a high probability of success, he turned the trading dream into reality. Rick currently has a mix of long-term stocks consisting of directional plays, dividend staples, and multi-sector index funds. On the options side, he utilizes medium-term options positions capitalizing on index volatility. For short-term day trading, Rick trades the futures market, which are typically closed by the end of the day. So he grew up and spent most of his life on or around the Chicagoland area in Illinois. He currently resides in Naples, Florida, opting to be closer to family, warmer weather, and the beach. So Rick, that's awesome. I also prefer warmer weather, which is why I live in Hawaii. But hey, welcome to the show. Absolutely happy to have you on.
How you doing, Mike? Great.
Yeah, I'm doing good. I'm doing good. So I gave a little bit of a background on you, but the first thing I like to talk about on every episode is to have you maybe share a little bit about your story. If you could get a little more detailed about what I just discussed about your background.
Well, I like I said, I grew up in, like the bio said, I grew up in the Chicagoland area. Solid middle class family. It was pretty good. No real complaints. We weren't rich. We weren't poor. 3 meals on the table every day, but I got what I needed. I didn't have a whole lot, but I got what I needed. Parents got divorced when I was around 8, and it's just me and my mom. And, we just, went for it. Didn't have a lot of money. So I knew I kind of had to make something of myself. It was kind of like, hey, no one's going to give it to me. I got to kind of earn it. And I discovered technology, back in the early to mid 90s, bulletin board systems and things like that. Started an internet company. And, basically, like I said, before the internet was there, America Online, if some folks might remember that, was around, and we started an ISP, and it just kind of grew from there. So did that for a long time, but I was always interested in trading. I always did stocks and different forms of trading. Didn't really know what I was doing, but you don't know what you don't know. And just decided that once I sold the tech company, I just decided, hey, I'm going to go for this and try to not make it a hobby anymore, make it kind of a full-time thing. And here we are.
Awesome. Thank you for that. That's pretty cool, man. Especially starting up an ISP back in the 90s, back when, you had to have the dial-up internet, and you got all excited once it did all that weird loading noise, and you heard the famous line, "You've got mail." Now I wish the mail would just slow down.
Oh yeah, we had banks of modems, banks of servers. I can't even remember so long ago, but it was definitely, you had a modem ratio of people that would dial in because it was different. Now it's broadband; it's a completely different thing because it's just one big fat pipe. But you had to literally monitor, especially during prime time, who was logging in and stuff like that. And what we found out really was. And the same thing held true for America Online. The money was never really in the access piece. It was in the media piece and in the advertising piece. So America Online, I think at one point had, I could be wrong, but around 20 million subscribers. And they literally, I think, were losing money or breaking even on their dial-up access. But they had 20 million eyeballs or whatever the number was. So they were making a killing on the advertising side. And when I kind of saw that, I was like, well, I'm not going to get to that many subscribers. So, we just kind of ditched the dial-up access and all that and went more into the web hosting and consulting and things like that. But no, it was fun times. And nobody knew anything back then. There was no college. There was no books in Barnes and Noble about it. It was just kind of like you get a machine and you start digging in and, geeking out on it a little bit and going to town. And it worked out, like I said. So I have no regrets. I like technology anyway. So yeah.
All that stuff was brand new. A whole lot of firsts happening back then. So
correct.
Yeah. Awesome.
For sure.
Okay. So from there, you got into investing, right? So I want to talk a little bit about that. But the first thing I want to ask you is about you personally. Like, what are you doing right now on your journey to or in financial freedom?
I do believe in diversity, but I want to preface that I think that if you have an edge in something, and we have to distinguish between active investing and kind of passive investing. If you're doing just, I'm going to buy Amazon and I'm going to hold it for 10 years or Bitcoin or whatever you're doing, where you're just buying and leaving it. I think you need to diversify longer term things. If you're short term trading, I think you just have to have an edge with something that works and don't try to spread it around. So I do have a lot of different things. I have real estate. I have, like I said, long-term stocks. I do medium-term options. I do day trading, everything in that regard. I own another business. So, I'm just kind of trying to spread it out where it makes sense and build a nice little nest egg for the future retirement stuff. So I do believe that everything should be kind of spread out.
Right on. That's great. Yeah. Diversification is key, especially because it's, if you put all your eggs into one basket and then you drop the basket, you got a whole lot of cracked eggs and you got to use it like right now. So
right.
Then you got to pick all the shells out. It gets pretty rough.
And I think it's different for different people too. Some people have, you can have a 401k, you can have a Roth. There's different things you can do with those different instruments as well. So that might not apply for different things, apply for different people, Right.
So how long have you been doing this? I know you had the tech company back in the mid 90s. So how long have you been investing?
Well, I started investing actually, again, just playing around right around 99. Again, just here and there because I was running the business and I didn't have time to sit there and 3-4 hours a day and mess around with it. I just started buying stocks and, I didn't know what I didn't know. Like I said, I bought a year 2000 stock, the Y2K stocks. And that was back in 99, thinking that there was a Y2K problem and, everybody was going to be a millionaire off buying my first stock. And it, went to zero basically when there was no problem. So I've been doing the stocks off and on, but I didn't seriously get into it probably until about 12 years ago. That's when I really started getting into it. And I started more with, I didn't really like stocks as much, just for longer term things. I like stocks, but I didn't really like the idea of day trading stock. And I didn't really know much about futures at the time. So I went into options and did options and didn't do good at that either because I, again, didn't know what I was doing. And it wasn't until I met my futures mentor for futures trading who really taught me about trading. And then I applied those same skills to the other things like options and stuff like that. And, that's when I kind of just started putting it all together. So I would say 10, 12 years ago, seriously.
Okay. Right on. So for me personally, like I kind of just dabble a little bit in the stock market. I have like some play money that I have in there. Minus my retirement account, my Roth thrift savings plan that I have. And then I have my separate brokerage account that like I said, I play around with. I'm pretty happy with it right now. It's sitting at it's up 28% for the year. So I think I'm doing something right. But I've always been interested in the folks that really sat down and got into day trading, because that's one of those things you really got to sit there and really pay attention. There's a lot of variables you have to look at and keep in mind. So I want to talk a little bit about that. So if you could, if somebody was interested in day trading, where should they start? There's
two main factors that people need to consider. Number one, you have to know what you're doing, which is, we can talk for 3 hours on that. It depends on what your bankroll is. How much are we talking about? Do I have $5,000 of money lying around? Do I have $20,000 of money lying around? And the reason I say that is because if you have a $5,000 account, and I'm just throwing numbers out, for example, you're not going to do too much with options. At least I wouldn't anyway, because you're just buying calls or buying puts, which is just kind of a leveraged way to buy stock. And, there's too many variables with options to make money. There's rules too with a small account. There's pattern day trading rules and different things like that. So if I had a $5,000 account, I would start with futures for sure. If I had a bigger account and I didn't have a lot of time to spend, because there's day trading where you have to literally stare at the screen, like every minute, every second, you're staring at it for 2, 3, 4 hours. And then there's day trading where you might have multiple positions on, but you're setting alerts and you're not really looking at things until they occur. And you can be doing other stuff in the meantime. Options work typically better with that. So start with a good education and determine what your vehicles will be that you'll trade based on the dollar amount that you have. That would be, and there's places that you can go to get resources like that. We have some community where you can kind of, get information and help on that as well. And just kind of point you in the right direction. Awesome. All right. So speaking of vehicles, right? So if you were more into like longer term duration type of investing, what vehicles would you use to structure a portfolio and learn how to manage it yourself? When you say long term, what kind of time frame are you talking about? Well, not day trading, like something like something you want to hold for maybe a couple months, maybe a year, maybe longer. I would look at selling time premium and options because those are trades that you can put on, anywhere from 15 to 30, 45 days. You'll be in them. Don't have to stare at the screen all the time. You can set alerts. If you have rules and you have a methodology, you can literally say, hey, okay, market's moving big today. If it gets to this price, trigger off this adjustment to the trade, depending on how you want to manage. You don't have to be there. You can have, in fact, a lot of people that we work with have day jobs and they go at lunch and they log in and they manage them that way. Or their stock, you have stock as another option that you can use for that. Again, requires a little bit more capital, less time to, be involved. But yeah, that's what I would recommend. If you're buying like these different options, what kind of variables are you looking at? Like for the person that's not sitting here staring at the screen all day, right? Mm-hmm. Like you said, you have, for example, the guys that go and do it at lunchtime, they'll go log in and see where the market's heading. What kind of variables are they looking at to make that decision, whether they're going to, make a change or stay? So it depends on what strategies you're using. I use various strategies in options, things like iron condors, butterflies, calendars, different strategies like that. And it depends on the duration. It depends on the vehicle that you're using. I like to trade a lot of index options, primarily because you get a tax break. There's something called a 1256 exchange contract. And it's basically a blended tax rate. So 60% of your earnings, and it depends on your accounting and things like that and what tax bracket you're in, but 60% of your earnings are taxed at your long-term capital gains rate, which is 15%. And then 40% of your earnings are at your normal tax rate, which is what you would pay, for your particular tax rate that you're in. So blended rate, you're paying about 25%. Let's say if you're in the highest tax bracket, you're paying 37, whatever the percent is, and then you're paying 15 on 60% of it. You're saving about 10, 15% in taxes on that.
That's pretty significant.
It's pretty significant
amount of money. Yeah.
Right. And that does not apply for things like stock. Like if you wanted to stock options. Like if you wanted to buy or sell options on Amazon or whatever, you would not get that break. It's specific indexes like the SPX index and the NASDAQ and different things like that. And by the way, that applies to futures as well. So any futures day trading, you get that. So yeah.
Okay. Yeah, 1256 exchange tax rate. I didn't know about that. That's pretty awesome.
Yeah, only on index options. So the strategies really depend on. There's a bunch of them out there, right? It just depends on, again, how much money do you have involved? How much time do you have? You need a little consulting. You need a little help. If you're somebody who, for example, can get the longer the time duration, the more time you typically have if you were going to make an adjustment. Some people don't believe in adjusting. Some people just put the trade on and say, hey, if I'm down 15% or whatever the number is, I'm just out of the trade. And they have those sell stop losses already set. If you've got time where you're at work and you have a desk job and you're like, hey, the market goes here, you can set these alerts in the morning. If it really goes big in one direction, you can say, okay, I'm going to log into my account, my brokerage account, and I'm going to, do something if I need to do something. If you've got that kind of job where you can do that, that allows you to have a little bit more different positions on and a little shorter duration positions. You can do weekly options positions where they expire in 14 days out. You might be in the trade 3-4 days. The issue with that is that if the market's jumpy in a particular day, then you need to be on it. And if you don't have that type of situation, then you have to select your strategies based on, again, your account balance, your knowledge of the strategies, and your time available to actually do it. And that's anything short of day trading where you're obviously sitting there all day.
For sure. Yeah. So again, I think one of the big things, and you mentioned it near the beginning, was education, right? So you don't want to just jump into something like this without knowing what you're doing. So making sure that you really understand the strategy that you're going to use is super important. It's nice to know that you can kind of day trade, even if you're working a day job, if you've got like that time, like during the lunch break, or, you could set the alerts and that you'll be able to make yourself available to, get in there and do what you have to do at those particular times. So
correct. And there's a lot of services out there. We have something, and it's in private beta right now, where people can follow along. They can actually follow along with trades, and they can get alerts, text alerts and things if there's going to be an adjustment made. So they don't really have to have the strategy. They can follow along with somebody else's strategy if they want to. And that can help people while they're kind of learning their own way and their own methodologies and wherever they're going to learn it from.
Right. Yeah. I've heard a lot of people doing it, something similar like that. And they get in like a Discord group and they'll set it up that way. And when the alerts come out, the message go out to the group saying, hey, this is what we're doing. And you can either choose to go with them or not. So
yeah, the issue with a lot of those is just, there's a lot of them out there, and you would be surprised. A lot of them, I don't want to say, a lot of them don't even really know how to trade themselves. I mean, we go in forums and we see people who are literally taking tests trying to get funded with like a prop firm. They can't, they fail the test 10 times and they got a Discord group, oh, it's free, go in a Discord group. And, it's just a bunch of people. And I don't mean to knock anybody. It's just really a bunch of people that really don't know what they're doing themselves. And it's like the blind following the blind. You really have to have a proven system, and you have to really watch. If this person is saying, hey, we're doing this, don't just start firing off trades. I mean, take it on a paper system first and make sure that for a good couple months, at least, make sure that this person sounds solid and the results are solid and things like that. Hey, I said to do this, this, and this, and here's the result. And over a few dozen trades, at least, depending on what type of trades they are, because people can get really burned that way. I mean, I did when I first started. That's what I did. And it looks good, and then it starts out good, and then boom, you end up making a little money and then you end up giving it all back. So selecting the person to go with is really important.
Yeah, absolutely. You got to make sure that whoever you're going into this with, that they have the proper education and credentials if you're going to be following what they're doing for sure.
Right.
Okay. So speaking of like, getting involved and following somebody and you don't really know what you're doing. And it turns out they don't either. What are some of the biggest pitfalls that you see people fall into when trying to trade the financial markets?
The biggest pitfalls is really kind of going in and just thinking what I've seen a lot of people do. And I don't understand this really in trading. I really don't, except for the only thing I can relate it to is that a lot of people treat trading as gambling. They just think, for example, if you were going to go to become a doctor, you want to be a doctor. You're not going to walk into an operating room, never going to school, never doing it, and here's a brain surgeon operating in someone's brain, and you're going to just take a scalpel and start picking around in someone's brain. You're going to need years and years of education. And it holds true for anything, whether you're a lawyer, whatever it is. The thing with trading is, for some reason, people think they don't have to do that. They think, well, I'll just go on YouTube and I'll watch some videos and I'll do it. Trading is one of the hardest things anybody's going to do successfully. And heck, some of the pros can't even, quote unquote, pros don't even do it and get great returns. But for some reason, the mentality of traders is, I'm just going to jump in. And we get calls all the time. We get calls from people, they've lost $5,000, $20,000, $50,000, $100,000. And this is over a period of time, 10 years, 15 years. I think the highest I've ever heard was $225,000 they lost or something like that. And they're still at it, banging away, like just taking trades and doing stuff. And I'm like, you got to, what education have you had? And then they're like, well, I went on YouTube and I bought this book and I bought this. And it's like, well, it's just not going to get you there day in and day out. And the biggest pitfall is, I think people just don't realize how hard it is. They see these people on YouTube with I bought Bitcoin at $7,000 and it's $60,000 and I'm a millionaire now and I'm 30 years old. And they just think they're going to jump in. And a lot of people have lost a lot of money doing that, unfortunately. So really get educated.
Yeah, you see that a lot now, especially, and I hate seeing this, but there's a lot of scammers out there now, and you see them in all those financial groups. They'll start soliciting members, trying to say, hey, come sign up for my Forex and crypto, this and that, or whatever. Oh, I can't stand it. I still get them every now and then. I'll get a message from somebody saying, hey, have you ever thought about starting a side business? And I'm like, let me guess, crypto or Forex?
Right.
And
so they're marketers. They're selling. They're marketers. They're selling a lifestyle. They're not selling the actual act of actual trading. Most, you see the things that you see movies about day trading and you see TV shows about day trading with the mega yachts and the mansions and all other kind of stuff. But there's a lot of guys out there that are making a good living and, they don't have the fancy Ferraris and the Lamborghinis and all that kind of stuff. It's just, it's about lifestyle. For me, I want to be able to, if I want to be able to go trade a couple hours in the morning and decide, all right, I'm clearing my calendar for the afternoon. I'm going to go to the beach. I mean, I don't need now. Could I work on that day an extra 5 hours if I had to make a much bigger nut every month or whatever? Sure, I could do that, but that's not, I did that. I did that in my tech business for 20 years or whatever. I don't want that grind anymore, So I'd rather trade my accounts, help people, when they need it, give them advice and, point them in the right direction. And, I'm happy.
Yeah. Right. You paid your dues, right? You did that. You did the grind already. Now you're at a point where you can, if you want to put in the extra work to make a little more money, you can, or if you want to just take the afternoon off and go hang out at the beach, you can also do that as well. So, but the thing is, I think the key point is that people need to understand is that didn't just happen overnight. Like you said, you were grinding for 20 years to get to that point, right?
And hours.
Sold it and then invested that money.
And hours and hours. I mean, when I first really got serious into it, I had my first child. I had my other business, which I had sold, but I kind of was on a contract. So I was kind of working with them on a consulting thing. And, it was like, do some trading, deal with my newborns, come home 10 o'clock at night. I'm looking at charts, until 1, 2 o'clock in the morning, 7 days a week. I mean, now everybody doesn't have to do that if they've got a freer schedule. It doesn't require that, but you still have to put the work in. Yeah, it definitely doesn't happen overnight. Even if you have an education, you still are going to make mistakes. You're just going to make a lot less of them. So you do have to have a little bit of money just that you're prepared to lose. And I know people say that's kind of a cliche, but you're never going to come right out of the gate. I mean, if you started stock trading March 22nd of last year when COVID started, and the market dropped 30% or 40% or whatever it was, a lot of people made a lot of money. And the same thing happened in 2008 when the market crashed. Everybody was going to be a day trader. They made a bunch of money and they gave it all back a year or two later. And, now they're not trading anymore, So, if you're buying Disney at $79, a year ago or whatever it was, or Boeing at 100, or, you could just throw a dart at anything. And, it was, but the thing is about that is that if you asked any serious day trader, including the big money day traders and big financial institutions, if you asked anybody in April of last year, did they think the market was going to be back up this high? 100% of them said it was going lower. So, nobody was right. The only guys that were right were the guys that dipped their toe in and held it. Some of them just started, new to trading, and, they made a lot of money, and it's great.
It's not even that they were right. It was more of a, they just got started, got lucky, and they got in at the perfect time.
Right. And there's a lot of guys that are still riding off of that. And if they are smart about it and they get serious about what they're doing, realize, hey, I got an opportunity. I made a lot of money. Let me put some of that money to work to actually kind of make this thing a business, because trading is a business. And again, it goes back to the whole doctor lawyer example I gave before. People just don't treat it like a business. They treat it like gambling. They don't treat it like a business. They treat it as an afterthought a lot of times. And you really have to be serious about what you're doing. And a lot of people try. It's just they don't have the right resources to get them where they need to go. I went through probably 20 or 30 stock guys. I went through probably 4 or 5 options guys, like serious options guys, where I thought like, hey, I'm learning this, and this is the holy grail, and invested a lot of time. And my story is no different than a lot of guys. A lot of people have done that. And 3 or 4 or 5 futures guys before I finally kind of got that mix. And it was a lot of time. It wasn't a ton of money because I traded not a lot. I didn't really risk a whole lot in the beginning. I was fine just doing it for the sport and kind of just paper trading and things like that. But a lot of guys get bored with that and they just start throwing money at it, and it doesn't work out so good. So I consider myself lucky in that regard that I never got beat up horribly comparing to some of the stories I've heard now.
Right on. Yeah. So speaking of capital and what you have to put in to get started. So how much capital does someone need to begin trading if they don't have a lot? Are there other options?
There are options. For example, let's say, for example, you just have $500. There's something now in futures called micro futures. There used to be the minis. Now they're coming out with micros. So there's people, you could open up an account for $500. The problem with that is you still got to know how to trade, and you're not getting an education for $500. There's too much involved. I mean, it's like a school, like if you want to learn everything you need to know. And so there's things called prop firm companies, and people have heard the old school prop firm companies. It's a little bit different. Now it's all online. You go online, you take a test, you prove that you can trade, you pay, $100, a couple $100, and you meet some profit goal targets and they'll give you the money. You'll use their money to trade, but you'll make, 80, 90% depending on the company. And they have rules. You got to trade by their rules and things like that. So you don't need a whole lot of capital. When I started, there was no funding companies like that. There was traditional prop firms, but you really they wanted you to have skin in the game. If they were giving you $100,000 account, you had to put 25, 50,000 of your own money. They would meet you with half of it and things like that. Or a quarter of it. Now it's like you can literally pay a couple $100 and they'll let you trade multiple contracts and you can make a decent amount of money. Key is you have to know what you're doing. So what happens is a lot of guys go to these companies figuring, a couple $100, I'll go take it. And they let you rebuy. They'll let you try as many times as you want. And what happens is people go down that rabbit hole and, it's the same thing. If you have an edge or you don't, you have a methodology where you have positive expectancy at the end of the week and the month and the quarter and the year, or you don't. So you don't need a whole lot of money, providing you think that you have a system that works. You can get in for very cheap, but those don't exist so much with options or stock. It's mostly futures right now. And there's regulatory reasons for that and things like that. But it's very prevalent in the futures community now. There's several companies that offer that have been around for quite some time.
Yeah. Oh, okay. Right on. So let's say you get involved with one of these prop firm companies and now are you making like a certain commission based off of how much they put into it? Like, let's say they gave you 100,000. You had mentioned something about, you get like 80 to 90%. Like, what did you mean by that?
Of what you make. So what they do is they make they make you pass a test. So they say, okay, and I'm just giving you an example because they're all different and each firm has they have multiple plans that you can choose from. Let's say, for example, I'm going to let you trade up to 8 futures contracts and you have to make $3,000. I'm not going to give you a time limit to how long you got to take, but you're paying a monthly fee. If you do it in a month, boom, you're funded and you've got the account. You could take 3 months to do it. There's no rush. You're just going to pay them every month. So you're going to pay them the $150 or whatever the amount is every month. If you fail, they will let you reset your account and start all over again. And, and then when you get funded, then they'll make you, leave a little bit of cushion. You have to build up a little cushion in your live account because it's live in the market. The test is usually on simulator. It's not in the live markets. And then once you build up a cushion, they'll let you withdraw, and they take a percentage. So they only make money when you withdraw. So if you're going to withdraw $2,000, they take their cut off of the $2,000. If it's 20%, $2,000 is $400. They send you $1,600. And again, the one thing with the funding companies that I should mention also is there is no 1256 contract with that, which we talked about for the tax break. You're getting 1099. So as a 1099, a company,
you're treated like a contractor.
You're treated like a contractor. So you don't get the tax rate. You're being taxed on that money, which again, don't worry about the tax. The tax is, if you can make money, you can scale
taxes. It's because you made money.
You know what? I used to yell at my accountant and scream at my accountant for years. And he looked at me and he said, Rick, you wish that you had to pay the government $2 million in taxes every year. He goes, because that means you made 4. And I'm like, yeah, I guess when you look at it that way, I guess it's not, we don't look at it that way. Unfortunately, most people don't, but you're right. I say, don't worry about the tax. The tax break is an added perk, but you first got to prove to yourself month over month that you can make money. And, again, some of these companies, they'll pay you 80, then after a year for your loyalty, if you stick with them, they'll go up to 90. So it's not a bad deal. You're risking none of your own capital. You're trading, some of them will let you trade up to 30 contracts, which 30 futures contracts, you could do a lot. You could lose a lot of money, but you could do a lot of damage. You make a lot of money with that and you're keeping 80% of it and you're risking nothing. So you don't have to have 100, 200. If you're going to trade 30, let's say S&P futures contracts in the ES, which is the symbol for the S&P, you're talking about, you got to have $100,000 you got to have a big account to trade that. So if you don't want to have that capital tied up, it's not a bad thing to do, even if you had the money, to give somebody the commission, if you wanted to go that route. So it can be done, you don't need a ton of capital to do it. It starts with having a proven methodology that works. That's what you have to work on first.
Right. Okay. So we've kind of talked about this a little bit, right? Whether, for folks that are trading without having specific strategies or having the right education, right? We kind of talked about like, hey, if you're not doing it the right way, you're gambling. So is trading gambling? Like, some people treat it that way, like you said, but how would you answer that if somebody asked you if trading is gambling?
Let's take a brief moment to hear from our show sponsors.
What's going on, everybody? So today I want to talk to you about the podcast editing service that we use for the Average Joe Finances podcast. That is editpods.com. And what I really like about them is it's a subscription-based service, so the prices are fantastic. And not only do they do the podcast episodes for us, but they also make us videos, audiograms, social media caption videos. They do our show notes, thumbnails. It's just fantastic products. Go check them out at editpods.com. What's going on, everybody? So I know there's a lot of busy individuals out there like myself. I find myself sometimes struggling with time management when I'm dealing with things with my blog, my podcast, managing my social media accounts. Sometimes it can be really taxing and time consuming. So one of the things I started doing recently that has been super helpful is outsourcing some of this work to subcontractors and freelancers. And I'm doing that through a website called Fiverr. I have a link in the podcast description below that will take you to Fiverr and give you a discount up to $100 off your first order with them. Check it out. It's been a lifesaver for me. It's been saving me a lot of time and a lot of stress, and I really think it could do the same for you. Check out the link below or go to www.averagejoefinances.com/Fiverr, Fiverr.
Let's get back to today's episode.
The answer is trading is not gambling if you're actually trading. And what I mean by that is are you going in just, hey, this, because a lot of people do that. They look at the charts, they're trading, and they're just like, oh, this feels right, so I'm going to buy here, or this. Nothing's by feel. Everything has to be done with a very, methodical entry points, especially if you're day trading and you're trading on small time frames. A lot of people will tell you, they throw terms out and say entry doesn't matter where you get in. It's how you manage it after you get in. Well, that may be true if you're trading stocks and you're holding them for 3 months, because you can average into a position, you can build a position, you can do different things. The entry doesn't matter. If you're day trading, entry is everything. Especially on small time frames. So if you're going into it without a plan, and it is gambling. I mean, gambling is basically just going in and throwing your money and saying, I hope for the best. Trading actually is based off statistical probabilities. You have a statistical chance of, and you need to know that. You need to know, I have a methodology where if I take 100 trades, I expect to win 70 out of 100. And I'm going to break or whatever the number is. It could be 55 out of 100. It depends on, and then we start getting into things like win-loss ratio doesn't really matter because it depends on the dollar amount you're making on a win versus what you're losing on a loss. So win-loss ratio isn't everything. But if you have a plan and you know the statistical probabilities that I'm going to take these trades and these are the results I expect, it's not gambling. It's there. But if you're just going in blindly, which unfortunately, it's sad to say, but many people do, then you're gambling and you're just going to lose your money.
It's kind of, you can kind of relate this to poker. It's like, going all in blind before you even see what 2 cards you got. Like if you're playing Texas Hold'em, right? We're not even talking about pre-flop. We're talking about, you didn't even get dealt your cards at, you didn't even lift up your cards yet and you're going all in. So, but kind of tying it into that. So can being a good poker player help you be a better trader? Because, a lot of folks that actually play poker are focused on that key word that you said before, and that was statistics, right?
Right.
And when you're looking, and you're trying to make decisions, is that something that might help you if you're trading options?
Well, not only can it help you, there's actually a lot of big firms, investment firms that are actually send their traders to poker school for partially for that reason. A lot of people will also ask the question, what was I going to say? A lot of people will talk about poker and they'll say, what's harder, being a successful poker player or a successful trader? And The answer is poker is much harder. And the reason why poker is much harder is very simply the hole cards, unknown information. And people will tell you, well, yeah, but you have unknown information with trading too. You can put a trade on and there's no guarantee if you're going to win or lose. That's not necessarily true. You might not know on that particular trade, but it's a lot easier to tell what's going to happen in the market intraday than what's going to happen in a poker hand intra-hand. Both have easier times and harder times depending on poker, who you're playing against or whatever. But if you can have the skill set of a good poker player, meaning you're disciplined, you're patient, you understand that it's a mathematical game, you understand that you're not going to win every time. You know, some poker players, when they're bad, they lose, they go on tilt. Everybody's heard the word, I went on tilt. Well, traders go on tilt too. So you're a bad trader, you're a bad poker player. But if you can master those skills that it takes to be a good poker player, and in fact, a lot of poker players, believe it or not, have transitioned into day trading now, because especially with, guys that have been around before the whole, for people who aren't familiar with it, there was a big crackdown in the United States with poker. They called it Black Friday. And, it was illegal to place gambling in poker in the United States. A lot of those guys that used to make a living went to trading and they used those skill sets. So yes, the answer to your question is yes, it can be. So it's a good tool to have as well.
Right on. Yeah, especially like this past year too, right? Because a lot of the tournaments and things like that got canceled. You couldn't be in the same room with all these people.
Mm-hmm.
But you know what you could be? You could be at your house with your laptop open and working on statistics, right? Working on what the equation is going to be. And I'd like to also think that, in poker, yeah, you're at the mercy of the 52 card deck, right? But when you're trading, there's so many other variables that you can look at besides, just one or two things that could change the probability of what the outcome is going to be at the end.
Absolutely. I mean, you can really get to the point where you really understand the markets very well. But like I said, there certainly are synergies between the two. So that somebody should, in other words, if you can go to a poker tournament playing No Limit Texas Hold'em, and you can sit there for 5, 6, 7, 8 hours, and you can be patient and you can play your game. And you're not overplaying your hands, and you're not doing, what do they say? I think, most Hold'em players in the tournament, should be playing about 16, 18% of your hands, something like that. Of course, if you're a more aggressive player, you're going to play more or whatever, but you got to have that discipline. And some guys just can't do that. So it's a good way to practice, especially if you want to get away from the trading charts. Practice playing poker, have your game, and practice doing the right thing for hours on end. And that will also help you, because you can know what to do in trading. You can even have a winning methodology, but if you don't execute it because you don't have the patience, you're still going to lose, so.
Yeah. So, this is going to help me justify what I've been talking to my wife about. I want to start poker nights back up at my house on Friday nights. So
I used to have them. I used to have them.
I used to do it too.
I moved to Florida about 3 years ago or 2 years ago, and then COVID hit. But yeah, we used to do a bi-monthly game in Chicago, and so it was good times. Yeah. I prefer playing live. I don't like the online. I mean, I play poker sometimes. Same. I don't like the online. It's just not the same feel. It's just not, I mean, again, mathematically, theoretically, it's the same thing, but it's, for me, it's just not as fun. Yeah. Start those games back up.
Yeah. I need to, once things start to open up a bit more and more people, I guess, are vaccinated and all that good stuff, and, less risk.
That was a big thing with our game. They tried to get our game back, and they didn't want the mask. Some people wanted the mask. They didn't want to show up. And it was like, so yeah, it's going to get better. Like you said, now that the vaccine's out, and hopefully life will kind of get back to normal a little bit.
I want to talk a little bit about, especially because of that, this kind of ties into what you were talking about earlier, patience, right? So you got to be patient for things to open back up and bring it back in. But, speaking of patience, like not only from poker, but like, many people who think that they would otherwise be a good trader, they have a fear of getting started because they believe you must have patience to be a good trader, and they don't believe that they're patient. So can you talk about that a little bit? Like, how does somebody who doesn't feel like they're patient, how would they try to change, I guess, their mindset on that, get more patient?
It's interesting. I hear that all the time. That's actually one of the biggest things that we get from people who have been trading for a while. And they just say, you know what, Rick, I know what I'm doing. I have a winning methodology, they claim, but I'm just not patient. I'm not a disciplined person. So I'm not going to be able to be a good trader. Well, and I actually spent the time with a couple dozen traders and actually looked at what they were doing a lot of time, and actually looked at what they were doing to find out that in fact they didn't have a winning methodology and at all. You have to know what you're being patient for. It's not that people are not patient. It's that they have to know you can't ask somebody to wait. Like if you're day trading and you're waiting for a setup to come, for example, to get into the market. If you don't know what you're waiting for, you're not going to be patient. You're going to sit there for a while. You're going to see the market moving. It's going to make a big move. You're going to feel like you missed out on something, even though you might not have, depending on your rules. And you're going to just jump in and you're not going to be patient. If you know that by entering that trade, you're going to lose money because you're doing the wrong thing, you're going to be patient. So it really comes down to, you have to know what you're waiting for. You have to understand what you're doing, and it will cause you to be more patient. And I tell people all the time, this may be, I don't know, not politically correct or whatever it is, but we've had people that come in and they say, look, I have ADHD. I can't be a trader because I'm too fidgety. I can't sit I say, are you taking medication for it? And they say, no. I say, you need to go get the medication. I mean, you need to do what you need to do, and not, and I'm not advocating whatever. I'm not saying one way or another. I'm just saying, if you want to accomplish something and something's holding you back, there is medical solutions for that. I mean, you can, I don't like taking the medication for, okay, well then you have a dilemma, because you have to be able to sit and be able to look for 15 minutes at a time at a screen. And if you can't do that because of a medical condition, a legitimate medical condition, then, you're not going to be very good at it. So you have to make a decision on, what you want to do. So everybody has the ability to have an understanding of what's going on if they learn properly and put in the work. And you have to come in and understand, if I see things where I can capitalize and I have an edge, a proven edge in the market, I'm going to sit and I'm going to wait until I get that edge, and I'm going to capitalize on it. Otherwise, I'm assuming I'm going to lose. If I do anything other than my methodology, I have several different methods for futures to trigger trades in a given morning or a given day. And all I know is that if I've done anything other than that, I lose money. If I follow that, I make money. And once you get that ingrained in your brain, you'll be patient, because who wants to lose money? I mean, nobody goes in to lose money. You don't go into a casino to lose money. Guys think they go into a casino, they think they're going to make money. They go in and I'm going to beat the system. I'm going to count the cards in blackjack, or I'm going to do this, or I'm going to do that. Or I'm going to find the poker table that has all the drunk people at 2:00 in the morning. And they think they have an edge. Whatever that edge is, they think they have it. In trading, I have just found that we're drilling this point home, but I really feel that it's a very simple business. Either you're making money or you're not making money. You're either green or you're red. And if you're red too much, you're doing something not right. And a lot of people will, again, chalk it up to, the markets were slow today, or I'm not patient, or I'm not this, or I'm not that. And what I found in 95% to 99% of the times, it's that they wouldn't have won anyway, because they don't have a winning system. And it's unfortunate, but I was there for a long time too, for a long time, taking trades, buying stuff without knowing what I'm buying. People buy stocks without knowing what they're buying. People are buying AMC and GameStop. They have that whole thing going on. And right now, people who bought it $80, even though the stock, it's trading at where it's trading at. It's worth what it's trading at. But, it was a $20 stock, GameStop, before, it went up. And now it's wherever it's at, 100, 200, 300. I haven't even looked at it lately. I don't trade that stuff. But there's guys that jumped in at 150 and they got out at 2.25 and they made money, and they think they're heroes. They don't know what they're doing. They just don't know what they're doing. But the problem is they think, I'm going to wait for the next thing to jump, and I'm going to hop on the train, and I'm going to do. That's not you look at the forums and you see all these guys. There was a guy on the forum the other day, and he's legit. He sold his house, literally just closed on his house, and he put like 100,000 into AMC. Literally, he sold his house to buy the stock. That's why he sold his house. And he's like, well, what am I going to do now? What do I do? How long do I wait? Like, he doesn't know what he's doing. He's asking the people in the group, like, how long do I hold it? It's like,
wow.
And there's a lot of guys like that. This is not an isolated incident. That's just kind of the dollar amount is probably a little bit more dramatic than most, because most people aren't doing that. But get a good education or follow somebody that has, and it's not neither extra easy, but there are resources out there. We have resources that can help people, and really be sure of what you're doing before you. I always say it's a marathon, not a sprint. There's no rush. If you're in this to make a quick buck, you're in the wrong business, because it's not, and again, this is more with day trading. Stocks is different because, the old adage with stocks, people say, well, your stock is down, but you didn't lose unless you sell. Well, if it never comes back, I mean, you're assuming, everybody just assumes everything's going to come back. And, it's just, I hear a lot of crazy things, this, by the way, that's why I don't really invest too much.
I say that a lot though. People I talk to at work and stuff, they mention, oh yeah, my 401k is down hard. I lost like $9,000 yesterday. I was like, you didn't lose $9,000. You lost $9,000 in value. Right. You don't lose anything until you sell it.
Well, and it's different though when you're talking about
holding it that long,
right. If you're holding it that long and it's a balanced portfolio, then sure, of course. I mean, over time, the market has proven over the last decades and decades and decades, it will go higher. So depending on but see what happens too is people will equate those terms, like you just said, those little buzzwords. They'll take that buzzword that you said, which may hold true for long-term holdings, and they equate it to short-term holdings as well. And it's not the same thing. And people do that with a lot of different things. Even chartists, people who look at charts and they look at a daily or a weekly or a monthly chart for buying stocks. Those charts aren't the same. If you're looking at a 5-minute chart or a 15-minute chart, they mean totally different things. The candlesticks mean totally different things. So people throw a lot of terms out there that may hold true for one thing, and then they just equate it for everything and they generalize it, and they run into a lot of trouble that way too. So just got to be careful and of what you're doing out there. That's all. You can make money doing it. You can make money doing it for sure.
So I think, a lot of this, we're talking about patience and all that other stuff, right? I mean, when you put all this together, a lot of it has to do with like psychology, right? So how much does trading psychology come into play to make a trader successful overall?
Trading psychology is a very important piece. I'm going to tell you that it's a smaller percentage piece that most people will equate. A lot of people say, oh, trading's easy. It's 80% in your head. I don't think that it's that high. Personally, it's just my personal belief. I do think it's a smaller percentage number. I would say probably put it into 20 to 30%, 40% tops.
That's significantly lower.
But it's significantly lower. And the reason I say that is because I don't care what your psychology, I know you can have the best psychology. Just think about it logically. You can have the best psychology in the world, but if you don't know where the winning trades are, you're not going to make any money. I don't care how good your psychology is. I mean, your mindset. So it is very important. And even though it's a significant drop, I do think that 20, 30% of the puzzle does matter. It's a very important piece. So trading psychology is very important, very, very important. It's just not as high of a number as most people, I don't want to say write it off to be, but it's just not as high of a number as people put on it. But it is very important. You have to be in the right mindset. You have to treat trading like a business. You have to go into it with the right plan, the right allocation, hey, if I lose, I just lost. It's one trade. There's going to be 30, 40 other ones or whatever the number is. The only way you're going to do that is to know your numbers. You have to understand what to expect. You can't get blindsided. You can't get caught off guard. You can't put a trade on and lose $5,000, of a $20,000 portfolio, fly off the handle. And you have to, position sizing is important. Portfolio management is important. And all of that combined is going to give you the proper psychology and the proper mindset to come into the market and do what you're doing. So that is very important. If you don't have that 20, 30, 40%, you're a loser. You can have a great methodology with bad psychology. You can know everything what to do. You can have a system that you've proven over 1 million trades works 80% of the time. If you don't execute it and you don't come in with the right mindset, you're not going to execute it right, and you're still not going to make any money. So all the pieces of the puzzle are important to being a successful trader. And nobody's going to be 100% all the time. You're just not. You're going to come in, you're going to have your bad days. If you're married, you're going to have a fight with your wife or whatever the night before or something. Your kids are going to do some knucklehead thing and aggravate you in the morning when you wake up. And then you got to sit in front of the computer and, the market's moving. And what am I going to do? You got to have that focus to be able to. So you're not going to do it 100% of the time. The goal is consistency. Consistency is key. The more consistent you can be, the more profitable you'll turn your methodology into.
Yeah. So, like you said, it goes back to your mindset, right? So not only having the right psychology for it, but the right mindset to know that, you need education, you need to know what you're doing, you need to have a good plan. And then you need to also make sure that your mind is right when you start. Because again, like you said, like you could have a fight with your spouse the night before, or your kids did something silly, or just something bad happened at work. And now you're sitting down looking at the screen and your mind's in a different place. So to be able to sit down and just focus and you have to put all these pieces of the puzzle together to get yourself to the right spot to do this.
Well, and health. We didn't even talk about health. I mean, you have to put, a lot of people, if you think you're going to come in amped up on a bunch of coffee, and again, this is more for day trading. The other stuff, you can have rules, you can have automations, you can have alerts for most of it. But specifically with day trading, if you think you're going to go and wake up and eat 2 bagels with cream cheese and then sit in front of the computer, people nod off. We talk to people, on the chat in the morning when we're trading, and it's like the guy doesn't answer. And then it's like, I fell asleep. The guy's falling asleep at his computer. Like, people just, you have to get proper rest. You have to condition your body properly. And again, this is more specifically for day trading than for longer term things, because you're like an athlete almost. And I don't mean to, I don't want to say like it's some sort of super thing or whatever, but you really have to be, if you're going to sit there for 2 or 3 or 4 hours and you're going to be laser focused on a screen, you have to be, health's got to be right, proper sleep, proper mindset, you make one mistake and, a lot of bad things can happen in the mind mentally with 1 or 2 bad mistakes that didn't need to happen if you were properly conditioned. So, and I don't say that to scare people. I don't say that. I don't want people to sit there and listen to this and say, oh boy, I can't do that. Like that seems like a lot of work. That seems like a lot of, I'm not saying that. I'm just saying you just have to focus on the right things. You can't mess around with, all this stuff that people, it's not the amount of information you have. It's the quality of the information that you have. You don't need to know 500 things. You need to know 20 or 30 things, but they got to be the right 20 or 30 things. The problem is people go on YouTube and there's 1 million things. And then how do you ascertain out of the 1 million pieces of information out there, what are the 20 correct ones out of the 1 million? And this is the game. This is where people spend months and weeks and years and decades, some people, trying to be profitable in trading. There's a whole lot of information out there, but you got to put the right pieces together. And you can either spend a shorter period of time to learn from somebody, or you can spend, again, the average person that comes into us has been at it a minimum 3 to 6 months, up to 4 or 5 years. But we get people all the time, 10, 15, 20 years, and they're still at it. Well, and I ask them why. And they say, I just have the passion. I've always wanted to be a trader. I want to do it. I'm not going to give up. I want to be successful. It's like, okay, well, and then you ask them, what have they done up to this point? And, it's the same things that I did. I don't blame anybody, because a lot of people just don't know where to go. That's really, they don't know the right places to go to get the right information. You would think with an internet that's got 1 billion web pages or YouTube or whatever's out there, you would think that there's, I'll just go on there and I'll find somebody. There's probably a couple hundred people that it's not. It's not a couple hundred. It's not a couple.
The problem is when you do that, there's so much information. It's oversaturation, right? You go to look for certain things and you get, overwhelmed with the amount of data. You do a Google search for options trading and, 5 million hits come up for these different websites. And then some of the top ones are people that are really good at SEO, might not be good at actually trading, or they have ads at the top. So it's finding the right person is important, which is one of the reasons why I do this podcast, right? And I bring people like you on to get your story out there, show, what it is you're doing and how you're successful. And then hopefully, some people will listen to this and be like, hey, I'd like to start day trading. Maybe I need to talk to this Rick guy that I heard on the Average Joe Finances podcast. Right. So yeah, that's the kind of the point of, what it is I'm trying to do here with my mission.
Well, and to your point with the information, I'll give you one more on that. It's not only going through the information that's daunting, it's that you don't even know what the proper information you're looking for is. You know what I mean? Like most people don't know. Well, yeah, okay. How are you gauging it? Most people go to a website and they say, oh, let me see this guy's results. Let me see what he's doing. And that's how I'm going to gauge it. But that's not the case most of the time. I mean, you have to know what you're looking for. You have to know. We get guys that come in and they start trading and then they're like, oh, well, I made a plan for myself, blah, 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 blah. I'm going to do this. I'm like, well, where did you base that plan on? Well, I just made a plan. I mean, I didn't have anybody to go to. So, and the plan is wrong. The guy wants to trade, options, call options with a $5,000 account. That's not the right plan. You're not going to make any money that way. I mean, it's not the right thing to do. He doesn't know that. He's just doing the best he can. So you also have to talk to somebody, and there's a lot of people that will even give you that information for free. I mean, not a ton of people, but there's people out there that really want to help people that will say, hey, what is, because trading is very personal. It's not one size fits all, or, it's some guys come in and they're like, hey, I got a couple hours a day. I want to day trade. Or some guys with the job during the day, I got a couple hours in the afternoon I can trade, and I got a $10,000 account or a $100,000 account. Or you're going to do different things based on your time that you have, your level of knowledge that you're willing to, of learning that you're willing to do, because everybody's different. Some people come to us and say, look, I don't want to learn. I just want to follow somebody. This is like a side thing. I'm looking to make a little extra money. I don't have the time to sit there and, and that's fine. Then there's options for that, but you got to pick the right plan based on your situation. And how would you know how to make those determinations unless you talk to somebody who knows? But that's not their fault again, because where do you go? People are doing the best job they can. They go online and they search. So I get it. But yeah, there are solutions and ways and people you can talk to for sure.
Yeah, but you make a great point too, for like the busy professional that just doesn't have the time to sit here and learn all this stuff. And, your situation is you can go follow the guy that's doing really good and get involved in his, their group and base it off that. Like a lot of people do that with real estate as well. A lot of the busy professionals that don't have the time to actively invest themselves will get involved in a syndication, and they'll be a limited partner and put their money in, and they're passive, right? So it's more of a passive thing for them. And we talked about that a little bit earlier about, active versus passive. So that's just one of the things that you can look at, if you're, too busy to sit down and actually learn it yourself and be actively involved.
Absolutely. Then there's multiple things that you can do for that. There's services where you can follow somebody. They're called like trade copy services, where you can actually put your money with a broker. You can mirror somebody else's trades. Again, there's different options with that. Some give you more flexibility, some give you less flexibility as far as when you can turn them on and off and things like that. So yeah, you can be as active or as passive as you want. And there's multiple levels from, hey, I want to do this whole thing myself. I want to take the steering wheel and drive the car. I'm going to spend the time to learn. I'm going to do it. I have the time to, I want to follow a guy and get a text alert to, look, I just want to put my money there and just let them take the trades. And I'll just be able to benefit, from, based off of, if they make money, I make money. If they don't make money, and I can follow it, I can watch it every day and make sure it's not getting out of hand or whatever, and it's consistent. So that involves even less time, so there's various different vehicles and ways that you can do to if you want to be involved in the game and, get your feet wet and stuff like that.
For sure. Absolutely. Yeah. So Rick, this has been an absolutely awesome conversation. I got some great notes here from sitting here chatting with you. I really appreciate you taking some time to chat with me, but I want to ask you one more thing before we get out of here, right? Because you are definitely a wealth of information when it comes to options trading, day trading, and everything, right? So if somebody wanted to find out more about you, do you have anywhere like a website or social media where people could learn more about you? And actually, I think we talked about this before we started recording, and for those listening, this is not something you got to see, but we had some technical difficulties in the beginning, but we got past all that. But Rick and I were talking, and I believe you just started a podcast.
Yeah, I have a podcast. You can go, it's called The Trader's Life. It's really just about my life. It's not only about trading. We deal with all things business, finance, health, life issues. I believe to be a complete trader, you have to be, you have to have a business mindset. Again, like we talked about earlier in the podcast, have to have good health. You're dealing with issues. You got to have the right mindset. That goes to the life issue. So we're having all different types of people on there, and there is going to be a second, either it's going to be a second podcast or an additional release that we'll have for the one we have called The Trader's Corner, which is actually dealing with more specific trading, because not everybody's into trading. So they just want to hear the podcast for the different guests and things. If you're a trader and you want more in-depth knowledge, charts and things like that, and examples and terms and examples and things like that, we're going to have that as well. And then we also have the trading community. It's in private beta right now, but it'll be out in about a month or two. People can go to the website at rickmazur.life. RICKMAZUR.life. Get on the mailing list. We don't spam. We don't send a bunch of unnecessary garbage, but you'll be alerted then when that community comes out. And the trading community, it's called Enlightened. It's going to actually be a really nice thing because it's going to be a place where people can go to actually get information, share trade ideas. If they want to follow somebody like we talked about, follow an options trader who is doing stuff, and that probably would be a subscription thing. We haven't got that all figured out yet, but there's going to certainly be a lot of free information on there as well, that people can be involved with and kind of talk more as a community as well. So you'll be able to get all that information if you get on the mailing list when that comes out at rickmazur.life.
Awesome. All right. So I'll make sure I have all those links in the show notes. So everybody, if you didn't just write that down, you can copy and paste it. Go check out what Rick's doing, his project with his podcasts. And I don't think you'll be disappointed. It's really fun having these conversations. And specifically, this was a topic that we haven't really talked or dove too much into on my podcast yet. So I was really excited to have this conversation with you today. And I really appreciate you taking the time to sit down and have a chat with me.
Thank you. I appreciate it. It was fun. Absolutely.
Awesome.